Good morning, everyone, and we are live. This is Travis Witherspoon from Carter Cow Trading. Trade with Travis on YouTube and uh, Trade with Travis on Instagram. I actually haven't done Instagram in a few days, so I need to make sure that I need to get back into Instagram. But I hope everybody's doing very well. Hope everybody's doing very well today as we go through and take a look at some overall trading opportunities. For us, let's go ahead and get to the disclaimer. Then after that, I start talking. So I'm not a CTA, so I'm not going to tell you whether to buy or sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. I understand that Forex involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind and understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it is not promised that you're going to end up making money today. So with that being said, showing myself onto the screen. Hopefully everybody's doing very well. I can see myself on YouTube right now, and I can see myself on Facebook. So there we go. Hope everybody's doing very well when it comes down to that. These first few days have been pretty rocky going into the new month. Obviously, we're going into the Santa rally. If you don't know what a Santa rally is, typically what that means is the first 3 to 4 weeks, you see a lot of people trying to really make that, really try to make money and be more aggressive when it comes down to pairs, so you can be able to have Christmas gift money, i.e. the Santa rally. So we're going to see a lot of volatility until probably maybe the 18th, and then after that, we'll probably see it start to die down. But we have to be able to take advantage of, positions when they give us the opportunity to be able to make money. Also, we got to be able to mitigate risk when sometimes the market ends up pulling away from us. And we're going to end up talking about that today, as well as being able to talk about some overall pairs. If you're new to us, what we do here each and every morning is we talk for about 30 minutes looking at some overall trading opportunities. If you're interested in being able to learn a little bit more, all you have to do is just go down to this website right here, cartercowcapital.com/start here, hop inside of one of our free webinars and be able to go from there. Also, our boot camp for this month is going to end up being December 14th to the 18th. Typically, we do it at the end of the month, but obviously the last portion of the month is going to end up being the 21st to the 25th. So I don't want to do it on Christmas. So what we're going to end up doing is that we're going to end up doing it from the 14th to the 18th. So you'll start to see us doing a little bit more promotion and everything else like to really kind of push for that. I really would like to be able to have you in. This is going to end up being probably the biggest one yet that we're going to end up doing. We've had some very good ones, but I'm going to end up doing a lot of gifts out there for the people that decide to be able to do that this month. So if you're interested in being able to hop in, please make sure that you end up subscribing to that and being able to go from there. Let's go ahead and take a look at the charts. The market has moved, especially when it came down to gold on a few pairs, and we got to take a look at that and see what that means for his overall trading opportunity. All right, so first thing, let's take a look at overall what's happening today. We look at it, GDP ended up coming out for the Swiss franc. The market actually ended up moving up, or the market actually ended up being very good when it came down to the Swiss franc. Actually, this number is way past the deviation that they thought it was going to end up being. GDP actually ended up recovering a little bit better, still at a negative number, but it's still a little bit better. And then after that, we start taking a look at unemployment rate. Unemployment rate for Germany was actually very good, but for Spain and Italy, it was bad. So overall, if you look at it, we can see that the market from the Eurozone actually ended up taking a little bit of a dive, especially with the consumer price index being as bad as it was. Going into a little bit later on today, you're going to end up seeing the GDP for the Canadian dollar, and we'll start talking about that pair a little bit more. And we're going to end up seeing Chair Powell end up testifying and end up speaking. Anytime that he ends up speaking, the market actually ends up moving. So please keep that in mind. And later on today, you're going to end up seeing the Australian dollar for its GDP a little bit later on today. So today is probably going to be the rockiest day of the overall market, and we're starting to see that a lot when it comes down to gold and a few other pairs. So today, really more important, you have to be able to practice patience. You have to be able to understand that if you're in bad positions, it's going to end up being red for a little bit. But you got to be able to manage those positions and allow the market to be able to move from there. So as we go through and take a look at these, I'm interested in gold and silver for us being able to look at placing in long positions, even though I think that the market is still considered to be somewhat bearish as of yet. It hasn't broken out of a bullish perspective, but the market, the way that it's covered up and the way that it's showing, it's going to end up being a little bit bearish. So we have to keep that in mind. All right, so here we go. US dollar index. We'll take a look at this from a weekly perspective. I'm going to go very quick on these. We see that the market is still bearish, and we see that the market is still moving towards its overall low area. Now, This market has not broken out this B area of 11,867, but if it does, then that means that we're going to end up seeing further movement down to 11,565. The weekly is still considered to be bearish, so that means that we need to be looking at selling on the overall dollar. But here's the problem. The dollar is basically in the buy zone, and it's basically done hit right at this overall B level and start to push back up, which means that this is showing a little bit more consolidation for its overall movement. As we stated yesterday, there's two things that can happen off of this movement. One, we can see that the dollar will end up going back up and then starting to push up towards 11,980 or towards that 12,000 area, and then after that possibly up to 12,084, and we start to see further more consolidation going into the new year. Or we can see that this market will end up breaking to the downside and rejecting. Currently, right now, we can see that we've seen about 3 or 4 days of overall wicks to the downside, and we're seeing that people are looking at being able to buy. So pairs like the U.S. CAD, pairs like the Australian dollar, United States, pairs like the pound United States dollar, where the momentum has been a little bit more toward the downside. A little bit more toward the upside in U.S. dollar weakness. We need to start looking at that for its U.S. dollar strength. Taking a look at what's happening with oil. Oil from a weekly perspective has pushed above this overall point. We're looking at being able to buy up to 64.95 when it comes down to movement. Now think about this, because this is the winter, because this is the season where we're going to see a little bit more traveling. We should see that the demand is going to end up going up on this overall price. So if we're looking at this, I believe that the market should be bullish. But if you look at the daily is pretty much in a position where it's in a oversold position. So what should we do? Right now, you should not be looking at being able to do nothing unless you're trying to sell down to 43 and see if you can get a little bit of a drop. The market has fell down, but it didn't fall down as much when it comes down to this overall movement. I'll pay attention to the GDP for the Canadian dollar and see if that's going to end up making it kind of move down when it comes down to their overall pricing. And then maybe you might end up seeing a little bit of a drop from there. But once it hits 43, I'm looking at being able to buy long term to 65 for this overall movement, turning past resistance into future support. Taking a look at gold. We end up getting into gold and we end up averaging into those prices. I felt like gold had a daily fall area of 1731, but the market is clearly in the buy zone. We're starting to see a lot of people look at being able to buy because of that overall situation. Now, what does this particularly mean? From a weekly perspective, we do believe that this market is going to end up being bullish. And I think that long term, this market still could go into the 23, 25 area long term. And I will be starting to average in when it comes down to being able to get buys in at that particular point. But we also have to keep in mind when it comes down to this overall movement, is this just a fake out, and are we going to end up seeing a little bit more push to the downside? So I'm talking to my people that actually end up using our quants. I would definitely look at being able to cut out some of your sales that you end up having, especially in this low wick area where it's right around the 1786 to 1800 area. You can be able to get rid of some of those, especially if there was sales. If you have them as buys, that's a very good thing. Stay in those buys, and then after that, work through that as we're going through and taking a look at this. If this market breaks above this overall trend line, it's going to go from the inner to the outer and then start moving up to the 1850 area. So I am interested in being able to buy, at least short term, if that continues to be able to happen. Right now, if we're looking at it in the way that the day is playing out, we're looking at more of a morning star for its overall movement. A morning star typically means that what we end up seeing is that we'll see a bullish reversal. Now, if this remains to be the same, then we should see that actually happen. So what does that mean? If you're trying to get in today, can you get in at this particular point? I'm looking at this overall market, and we're going to see this on a few different pairs. We've seen a W pattern that end up happening from the overall bottom side. And let me explain what that actually looks like. And we're going to get into a little bit of detail off of this one, but I want to make sure that we maximize our overall time. We see that the market end up going down, up, made a new lower low basically at this low, and then popped right back up, and it recovered from this overall position. Now, from this, typically what happens is that the market is going to end up falling to at least the halfway point. And then if it falls to the halfway point, then after that, that's when you need to look at being able to average in for its buys. Once you average in for its buys right in that area, then after that, you want to look at being able to buy at least to the outer trend line, because I think it's going to end up going back up to the 1843 area if that does happen. Okay, so we want to be able to buy and average in right where this market has this little dip right at the top. That's 1788. Anything below 1788, if you're actually in sales, you need to get out of them. If you're in buys, remain and hold on them. If you're in positions right here to kind of average out your positions, be patient and see and ride this thing out while this market actually ends up moving towards the upside now. But once again, if it doesn't break past 1819 with any type of force, then I will overall say that the market is still considered to be bearish, and I still think that overall that it will fall to 1731. But because the market's in the buy zone on daily, typically people end up buying instead of selling. So we just got to keep that in mind. Okay. Now, taking a look at silver. Silver has made that same type of move, and it has already broken the counter trend line towards the upside. So what does that mean on this one? There goes your morning stars. We're looking at this overall movement and kind of putting this towards what we end up seeing for that one. You got a pin bar. You got a basically you got an indecision candlestick. You got a movement towards the upside. This movement has been very strong from the beginning of today. The low was at 22. It's done went to 23. Typically, the next day you will end up seeing that the market will end up retesting this overall zone. So if we go down to the 2 hour, I guarantee you'll see that same W pattern. And if you look at it, here it is again. Let's see. If you look at this, here goes the W pattern once again. We end up having this market moving to the downside, up, fell down right here, pop right back up. It's already done broke past that overall position. What are we looking for? We need to see that the market is going to end up falling down a little bit. This one may be a slighter of a fall, but we want to see that the market kind of falls down. And then after that, we need to average in for it being able to buy up to this position going up to 24 and being able to get into that. So once again, if you're already in positions and those positions look down, get away from the computer. That's the best way that I can be able to explain it. It's gonna end up looking bad at the beginning, and hopefully, when the market starts to recover a little bit, you can be able to cover up some of your sales if you're already in. If you were in sales, and then after that, start to average in towards buys. If you're in buys already, quite frankly, do your make sure that you maintain those buys and stay in those because remember, we believe that silver and gold are going to end up going up long term. So that's where we're at right there. All right. I want to take a look at the XPX 500. XPX 500 was a little wonky yesterday. Here goes our W pattern from here, our double bottom. We end up seeing that the market ended up hitting the bottom, went back up, hit the bottom again, push back up. We got a breakout, retest, and then push back up from there. All right, that's a great thing. That's something that we've been looking for. Obviously, we've been making money on the way of this market moving up to the upside. Now, what do we want? We want to be able to see if we can get into this one because it has broken new high. Because the market has broken the high, it's in the push zone. It's going to move to 3760, and I think it's going to end up moving to 3760 very fast. The question is, can you get back in for this overall position if you did not stay in those overall long trades that we did? I end up getting a EA entry off of this when the market ended up breaking the counter trend line break right up here, and because it's a little bit short-sided, it basically ended up taking that trade and it only went for what it went. What I would look for is this. I will wait for the market. I want the market to be able to hit the 37. I want the market to be able to hit the 36.35 area. 36.35 we end up being basically right where the moving average is. If we can be able to get it to where the market ends up falling down to that area and it starts to get into the buy zone, I think that'll be a very good trade to be able to buy up towards the long-term position. So if we can be able to get it to drop about 30 points, then that'll end up being great. I think it'll be short-sided when it ends up dropping. Then after that, I think it'll end up popping up to the upside. So just like what we did right here, I just want to be able to see this market move towards this 36.35 area. Anywhere from there will be a very good price to be able to get in. Okay, so essentially look to buy at the 36.35 area. Place your stop below 35.50. Target 37.60. There you go. There goes your game plan. And you end up looking at that. I think that end up being a very good move. This one can be one that you can look at being able to average in very strong. The reason why I believe that you can average in very strong is because of what's happening for the overall position at this particular point. So that's where we are on this one. US 30 actually ended up making about $665. Quite frankly, if I would have stayed in and allowed the EA to be able to go all the way to its position, I would have made about $700 this morning, which would have been great. But overall, we're going to still allow this market to be able to move. We're going to take a look at this very quickly when it comes down to the daily and the weekly. Once again, same type of pattern. We got that same W pattern. Same double bottom right here. Went up here, election time, hit this position, broke out, retest, broke out again. We have this top area where it has not broken out as of yet, but if we look at we look at the SPX 500, we've seen that it's already done broke a new high. So what do I expect? This market is very still closely to the buy zone. The D extension's at 3479. The long-term movement is at 3,300. I think that this market is going to end up moving and really kind of rallying and pushing towards the end of the week. Towards the end of the week. Overall, what does this mean? We need to go ahead and hit this one big on this overall movement. The market is in a 2-hour sell zone right now at this particular point. What I will look for is seeing if we can be able to get a drop towards the 28,847 area, down to the 27,742 area. Anywhere around this overall area where we found support at previously. Any area where we found support at previously, right around this area right here, will end up being the area where I want to be able to buy. We could be able to get into that and be able to sustain that. I will place my stop below the overall pivot low, which will end up being right around 29,150 or 29,160 for the overall position, and be able to go long term towards the 30,478. So same deal. I like this position. We've made good money off of this overall position. We recovered from yesterday, so we're up for the week. Okay. Look to buy around, let's see. Want to look to buy right around the 29,750 area or 29,700 area. I'll go a little bit lower than that. Let's say I don't think it's going to fall that low, but we're going to say 29,600 to 29,700 area. We get that. Place your stop below 29,350. Take profit. We end up being 30. What is that? The extension again? 32. That has nothing to do with it. 3479. I think that ended up being a good position. Once again, these are ones that I'm looking at being able to average in very strong for these positions. One, they need to make up for my gold trade that I'm actually going down on in this overall position. Plus, they're in R3 positions. You've been a part of the masterclass. You understand what I mean by that. Last one real quick that I want to take a look at before we get in US-based pairs. NAS 100. NAS 100 has done very well for us. Done push up towards 12,390. End up taking some buys right around the 12,100. I wish I would have stayed in those, but the market ended up having a huge drop towards the backside and basically retest this overall downside area again, in which now we had a full breakout and then a retest. Now we're having a breakout again. Now this market is expected to be able to go up to the 13,000 area. So 13,098. You remain to be in those overall trades and firing good trades while the market is actually moving. I think that you'll be able to fully get everything out of this one. The only thing is we have to break 12,460. If you break 12,460, then the market is going to continue to be able to move, and then after that be able to push up a little bit higher. It may not push up today, but I think you'll be able to do that over the course of the next couple of days to be able to get toward that position. So I think we're going to get one more chance to be able to get a low price. I think that low price will end up falling down toward a moving average anywhere around 12,239 ish or 12,250 ish. I think that would be a great position. You want to see this market get into the buy zone. Once it gets into the buy zone, take that overall trade and don't look back. Allow this market to be able to move from there and be able to go from there. Anything inside of there will be a very good number to be able to stay in. Right now I'm averaging at 12,300. So I know if I get in, then I'm probably going to end up looking for my positions that I'm in right now will probably end up being or will probably end up being looked at for us being able to get put or get be touched while it's actually happening. That's fine. I've already done average in on one other trade, so we're good at that. But we're looking at being able to get that from a long time play. Okay, U.S. based pairs. What are we looking at? From a U.S. based pairs perspective, we want to look at the U.S. CAD first. I want us to look at the U.S. CAD first because we talked about this market breaking above 1.32. The question is, has that happened yet? The answer is no. We tried to get in a little bit earlier off of this counter trend line break, and it did break, but it then after that subsequently broke below. So it's at 1.2975. As long as this market stays below this overall trend line, we don't have a trade into that overall point, even though the market is actually in the buy zone. I believe that, quite frankly, if you want to be able to buy, and we're looking at the U.S. dollar index being a little bit strong, and we look at what's going to happen with the GDP, the market is basically in the buy zone. The market is in a good position to look to be able to buy. I think this one is not necessarily a gamble. I'm not going to call it a gamble, but I'm calling it more of a educated guess to say, can this market break above? Can this market at least break back into the 1.23 area and be able to take a chance from there? And what I want to see is this. If we're at a 2-hour D extension, then I'm going to look at being able to place a buy-in for this short position. The reason why I'm going to do that is because that overall, I think that even if the market is not fully bullish, I think that we'll end up getting back to 1.23. And that's just my overall thought process on that. So I'm going to look at the 2-hour. I'm going to see if we have an area where if the market has hit a D extension, or better yet, if it's at a very short position, we're looking at a 1.18 move. If we have that, then we may have a trade. Let's see. So keep this in mind. We're seeing this little small consolidation above the consolidation that we looked at before. Market hit the B right here. Market hit the B right there. Market is going to end up pushing up. If it goes up to the top side, then that means that it's going to end up going to 1.3140. If it goes up to 1.3140, then we're talking about at least another 200 points. GDP is actually coming out for the Canadian dollar a little bit later on today. We're talking about 186 pips from there. It's about $1,800 worth of movement if you're looking at being able to do a standard lot for the overall movement towards that position. Can it happen? Yes. The question is, will it happen? Don't know that yet. But we do know that the Canadian dollar for its oil should go up at this particular moment. But going back to what we ended up saying a little bit earlier, I believe that oil is going to end up dropping down just slightly before pushing back to the upside. So this is what I'm going to do because I'm looking at what happened with the U.S. Swiss franc, and the market is still not there. It hasn't hit 90 cents yet, but we're getting close to the buy zone on this one as well. I think that the U.S. Canadian dollar will probably be the first initial move for this market. We look at what's happening with U.S. Japanese yen. It's still in a major consolidation. Get what you can when it comes down to that. And the market has rejected this 1.19 area as well again when it comes down to the Euro United States dollar. So what does this mean? Eurozone is in the sell zone. U.S. Canadian dollar is in the buy zone. The pounds actually end up making a little bit of a drop off of the daily. I think that we're probably going to see a day of U.S. dollar strength, just slightly. May not be the biggest thing in the world, but I do think that we're going to see a day of U.S. dollar strength. What I'm going to do, I'm going to take a shot at this. I'm going to be see. I'd be mad at myself if I wouldn't take a shot at this. What I'm going to end up doing is I'm going to place a buy trade. I'm going to place a buy trade with my stop loss. My stop loss is going to be below just below this overall swing low. That is at 36 pips. So I'm going to go 35. My stop is going to end up being at 1.2940. 1.2940. If it breaks above this overall trend line, then it's going to end up moving very quickly. 1.2940, I think it's a very good position. I'm going to end up buying it back up to these overall highs, back up to this overall position. Let's go 1.3140 as an overall position from that. I think that that is a solid position to be able to get into. This is a speculative move. I'm saying that from the jump. I want everybody to be able to understand that. The reason why I'm saying that is because I'm looking and seeing what's happening with the U.S. dollar in general, and seeing that we're seeing this overall move starting to be able to make a upside move in the dollar is basically in the buy zone. So this is more of me taking a chance than anything else like that. And I've been prone to take chances. So uh, let's see. Let me go back to the U.S. dollar index real quick before I make this decision. Let's see. Australian dollar, United States dollar. What happened? Market ended up retracing from the top of this. When we have a breakout, we're still retesting from this overall position that's in the sell zone. We're looking at this is slight mini drop. Go New Zealand dollar real quick. I'm gonna go ahead and take this buy. I'm not going to second guess myself on this one. I'm going to go ahead and take it in that position. I think that, quite frankly, I'd be upset if I wouldn't take it in this position. Even if I'm wrong, I'd rather take the shot. And I think some people understand that when it comes down to certain positions. So New Zealand dollar, United States dollar is the only one that's still strong. The market is moving up to 77. The market is supposed to move up to 70.40. The market has already hit 70.40. So the people that end up getting in on that one on Monday, we actually end up talking about being able to get out of that and take your overall profit. What I would look for overall is that I want to see how the market is going to end up reacting towards being able to push up towards being able to push down and go back to 62 if that's going to end up happening. Last pair, New Zealand JPY. We got into this last week. We ended up getting into the buy. We said that we wanted the market to be able to break out of this 70.25 area. We said that if that does happen, then after that, we wanted to look at being able to buy long term. Currently, right now, the market is in the sell zone. That doesn't necessarily mean that much, but we do want to see how the market is going to end up retracing. We're going to keep on monitoring this overall pair. If it remains to be above 70.25, then after that, we'll look at being able to buy on this one long term. So that's pretty much it for these overall pairs. What I'm looking at overall is that I believe that the market is going to end up ultimately pushing up. But once again, we're looking at being able to get that to about 76. They're going to end up remaining to be patient on that overall pair and go from there. Let's clean up this US CAD. This is the only trade that I have today, this morning, as we speak. Remember, we're looking at a few other pairs, in particular the indices. I think that the indices will end up doing very well. You're looking at being able to buy on gold. We want to wait on that one just a little bit and be able to see if we can get something off of that one. But US Canadian dollar, this is me taking a chance on this one. I will say that market's not even in the buy zone. So I'm going based off of what's happening with the US dollar index for this movement. I think that from a daily perspective, we see that the market is trying to push up past 1.30. We've seen that this market has held 1.30 before. Will it move up to 1.34? I don't think that's going to end up happening. But if it does, then that could be a viable position of where it could go ultimately. This market has about 7 to 11 days of overall upside movement. But I do think that if we're talking about where could it go first, I think that this market could go at least to the 1.3150 area, somewhere around there, to be able to look at that long term. So what I'm going to do is that I'm going to be conservative, and I'm going to say that I want to be able to get out right around the 1.3150 area for the overall spot. The 1.3150. my stop loss is going to be at the low of today. The low of today right now at this particular moment is 1.2942. So I'm going to place my stop at 1.2940. Hopefully we're going to only see upside movement. If we get that, then we'll be good. If we lose, then just a small little loss compared to a big win if we can be able to get it. Okay, so that's what I'm looking at for this overall movement. Hopefully it plays out in our favor. Once again, if you don't feel comfortable with this position, don't take it. If you do feel comfortable with the position, I would probably go with maybe 3%. I wouldn't average in the full amount, but I would probably go with 3% for us being able to make a play on this one. And hopefully we can see that this market will push above this overall movement. We can start to see a little bit of US dollar strength going into this overall movement. If that does happen, then that'll be great. I think that will be okay. If not, then obviously it'll be a quick loss and it'll be somewhat painless when it comes down to that. So that's pretty much it. If you like what we end up doing, please make sure that you subscribe to what we end up doing with Trade with Travis on YouTube. Please make sure that you end up liking the Carter Cow Capital business page and subscribing to Carter Cow Trading on YouTube. If you're interested in being able to hop in one of our free webinars, then all you have to do go to is cartercowcapital.com/start here. Then after that, be able to go from there. All right. Like always, plan your trade your plan. I see each and every one of y'all.